Joining us for another RJRGleaner Group virtual town hall meeting. I'm Dion Jackson Miller, and a very special welcome to our viewers and our listeners across our platforms: TVJ, JNN, Radio Jamaica, OneSpotMedia.com, Power 106, our YouTube channel, and the Gleaner Online. And this evening we're looking at COVID-19 and its impact on your investments. Everybody wants to talk about money, right? And we have experts joining us this week to answer your questions. In studio we have Dennis Chung. He's a director of the Pensions Industry Association of Jamaica. Our other guests are joining us online, so bear with us if you have a little bit of drop in connectivity sometimes, you know what's going on now. We have Managing Director of the Jamaica Stock Exchange, Marlene Street Forrest. Also with us, Professor of International Business at the UWY, Professor Denzel Williams, and Managing Director of A. Peart Advisory Services, Alison Peart. Also with us, finance blogger and business advisor, Gillian Jackson, of the online community Finance Twitter JA. You always have to give a shout out to Finance Twitter JA. You should check out their hashtag as well. All right, so one of the questions people have though, before we get into all of the issues, is what's going on with the dollar. So maybe we should set the stage with that. And we went out onto the streets to ask people about that.
Oh, everything is going down because, as we can see, the country is kind of in a devastating condition, and the dollar is going up. It's not really going down to me. Someone know what's really going on.
We're not earning enough in order to pay for all that is going on. Right? We're doing a lot of imports. We're not exporting. We're not producing enough in order to export anyway. And the one thing that we depend on, which is tourism, see, it's gone to the dogs. Why? Because of the coronavirus. I don't know what's going to happen to us. US is having their major issues, and yet still the dollar is going up. I don't know what is going on.
No, them need to do something about it, because we're too low, or whatever it is. So how we're going to manage, we're not working, find food, how we're going to manage, we don't know. Oh boy, it's stressing. So honestly, we don't even watch the news to see what going on with it, because all the things set right now, I'm afraid people watching news to see it.
I buy some stocks and I'm losing a great deal of money, and money not going up anymore, because you know every company kind of losing, so every stocks are going down, so it's kind of really bad too.
So the dollar sliding is inevitably leading to inflation. That means that we're going to be paying a lot more for stuff. The problem is that we don't have jobs now. A lot of people are being laid off. So things are costing more, and there isn't money to pay for it. There's going to be a chain effect, and I just don't think we're ready for it. The economy is in a bad shape as it is. I just don't think we're prepared for such a setback.
No, that one you drop and that one you know cost the people them for everything up there, and nothing can come down. The last time I tell you, say the dollar's gone upstairs, you know, put on shoes, and it now come back down. When I forgot, you know, remember the dollars. If you want to know, gone upstairs and now come back down. It make bite of the week again. Bye.
Okay, man said the dollar gone upstairs and it now come back. Well, one thing's for sure though, whenever you have a situation where people are concerned about the value of the dollar and its impact on inflation, they also start to look at what's the impact on our investments. So let me ask our panelists to start out first in terms of what's the impact of what we're seeing with the dollar. How is that going to affect everything else that we're talking about? Dennis Chung, let me start with you.
Well, the dollar is going to affect certainly prices of things that are imported and local things too, because a lot of our local production has a lot of import content. I think that the move that you see in the dollar right now, and it has come down somewhat, because it started the month at about 144, it's about 145, now it went up to 147 something. So there's some speculation involved, because as stocks and all those things come down, then people are going to move towards what they consider a store of value for money. And the best store of value for money in these times is the US dollar. So people have in mind that. How is it going to affect the average person? It depends on people's purchasing habits, right? Right now, I don't know if that is affecting the average person a lot. It might be affecting businesses a lot, because a lot of businesses are not able to get money to carry things in, and that is where the big effect is. But on the average person, a lot of people have cut down significantly on their purchasing a lot of food items more than anything else. I don't see it's a big deal on the average person right now.
Well, Stacey also has a question, so let's bring in Stacey's question, which in fact relates to the dollar. She's saying, has a slide we've been seeing in the dollar been directly linked to COVID-19? Professor Denzel Williams, what do you say to Stacey?
Well, to make a direct statement that it is directly linked to COVID-19 it would be a bit premature. However, what we do know is that our international reserves was about 3.2 billion. And as you would have recognized, the significant amount of loss that we have seen from tourism inflow, remittance inflow, etc. So as a result of that, then people would now starting to just to speculate, to say, well, at some point we would not have enough foreign exchange to do what we're doing, and therefore they're trying to actually get as much as they can right now. So the demand, it impacts on the demand and supply. As the Bank of Jamaica governor said, that we're about 30 million short each week, and that is directly related to our loss of revenue from our main foreign exchange sources. So there is some link, but there are also other factors that are moving it. Things to do with speculation and the kind of transaction that large companies are doing as well.
Marlene Street Forest, let me ask you to comment, impact of the dollar?
Yes, well, Dennis spoke about the fact that persons will be looking at where they are going to be doing their investments, whether it is in a Jamaican dollar currency or US dollar currency, and also whether they would be doing that on the market or off market. Obviously, when we talk about the stock market, we do have different forms of investment, US, Jamaican, and I believe that people will be looking at stocks that are denominated in US dollar and to probably look at varying the portfolio to move towards some of that. So there will be a shift in how persons diversify within their portfolio.
Right, and Gillian Jackson.
Well, it would impact rental prices. I spoke to one realtor yesterday, and she said that what she's seeing is that the properties that were previously rented in US dollars, she's seen a lot of those have to convert to Jamaican dollars because I guess the prices are just too high for persons to afford right now. So that, I think, would be one of the impacts in real estate.
Okay. Well, I tell you what, we also had a video question. So let's go to that video question. Let me just remind you that you can send in your questions, in fact, throughout the program. It's 3810072, 3810072. So let's look at pensions now, because we got a whole heap of questions about pensions. So let me start with Chadwick. Chadwick wanted to know what is going to be happening to pension funds during this time. Dennis Strong.
Well, if you think about it, pension funds are going to be hit from the point of view of the fact that they are invested in assets that are hit. So a lot of pension funds, certainly up to last year, because of how the stock market was doing, would have bought into a lot of the stocks, and the stock market has gone up by about 30%. So I've been looking, as a trustee also, I've been looking at pensions over the past few weeks, and they've taken a hit. Now, the level of hit depends on the mix of assets you have also, because if a pension fund was skewed more towards fixed income, for example, then they wouldn't really get a hit, right? But if you had a higher percentage in equities, then it would take a hit. So it's very important for the individual to understand the mix, the allocation mix in terms of the assets that they're invested in, real estate, equities. Equities has taken the biggest hit. Real estate is another popular choice, but also fixed income. So I've seen that more and more people are trying to move towards fixed income, but the pension would have taken a hit already. Now, from the point of view of the pension industry overall, remember also that the pension gets its income from contributions from employment.
Right.
Now, if more people lose their jobs, right, it means that, number one, the income going to the pension funds are going to be less. So couple that with the fall off in investment.
Okay.
But number two also, and this is one of the things we've been looking at, is that people who have lost their jobs might go towards the pension and say, let me take this out and use it for my everyday living, because you lose a job and you have the right to take it. So there's a possibility that pension funds could take a blow from that perspective.
Okay, let me go to a video question from Mark.
Good evening. I am Mark from Bull Bay. For individuals who are currently employed to companies and the companies to which they are employed are talking about either cuts in salaries and or laying off of individuals, how will this affect their pension contribution?
Okay. You were referring a little bit to that, I think.
Yeah.
All right, let me just let you finish your response before I go to the others.
Yeah, so if your income go down, then there's no contribution from it to the pension. But I mean, the employer portion might still be contributed, but the employee portion. So the contributions to pension get less. Now that's a situation that a lot of people have not been talking about, because when you think about it, Dion, what is going to happen in a few years when people are ready to retire? Pension funds gone down in terms of the value. The contributions went down, so the amount of annuity available to people are going to be less. So we have that crisis looking at in a few years, and already only about 10% of the population had any pension.
Wow. Professor Williams, let me bring you in on this, because indeed, I know this was a concern that a lot of people had been expressing, that not enough of us have pension plans. So couple that now with what Dennis Chung just described, and what do we have?
Right. So what Dennis just said is absolutely correct, but there's also another variable to consider, Dion, and that has to do with the interest rates as well, because a lot of the pension funds will be invested in all kinds of different asset class. And now when the interest rate is so low, and the yield curve is actually trending down, you realize that the investment that you're making is not giving you enough return so that you can pay the kinds of pension that people would be getting. So as a result of that, you will find that the pension funds going forward will be struggling to actually pay their monthly contribution. And as I said, as Dennis said earlier, with less people contributing to the fund as well because of the furloughing of workers and also people losing their jobs. That in and of itself impacts on the pool of funds that these pension funds have to invest. So, I mean, it's going to be a troublesome issue going forward.
Well, I tell you what, let's go to the break. We'll come back. Stay with us. We have much more. We haven't touched stocks yet. We haven't touched real estate yet. And of course, want to know how do we move forward on this. So remember, you can still send in questions 3810072. That's 876-3810072. You can WhatsApp them in. You can text them in. And we'll put them to our experts. Stay tuned. We're back right after this.
I'm a taxi operator, and see, you know, I have masks all over the place, I have masks. But I can't manage the road, so today, I have to go to a river now. So I buy my fish line, a river I go. And the fish talk out there for them not have to. Yeah. All that because I can't pay for my car again. They intend to take it back for me right now. Can't manage and the government not nothing for me. Nothing at all. Because my name is so good. They not give me the money. I not get the money for, you know, how for my policy set up. Yeah. He beat me, so a fish line me come by. I go a fish bush with now.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much.
The education system, tourism, businesses, and everyday life have all been impacted by the coronavirus pandemic. But what about your investments? How has the pandemic affected your savings for the future? Join us for another RJRGleaner Group virtual town hall this Thursday, May 21 at 8:30 p.m. as we discuss COVID-19 and your investments. Ask your questions. Get the answers you're searching for. That's a virtual town hall this Thursday, May 21 at 8:30 p.m. on TVJ, JNN, onespotmedia.com, The Gleaner Online, Radio Jamaica, Power 106 FM, and TVJ's YouTube channel. Send us your questions to 876-381-0072. That's COVID-19 and your investments.
Reduce your risk of viral illnesses like the flu and coronavirus. Wash your hands frequently with soap and water. Cover your nose and mouth when coughing with a tissue and dispose of it. Avoid close contact with anyone with a cold or flu-like symptoms. If you become ill, please visit your doctor or the nearest health center and share your travel history. The flu and coronavirus can kill. Let's protect each other. A message from the Ministry of Health and Wellness.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much for watching.
Thank you so much for staying with us for another in our series of the RJRGleaner Group virtual town halls. Today we are focusing on COVID-19 and your investments, and want to go to a couple more questions on pensions. Remember, still to come, we're going to be talking about stocks and securities and real estate, so all of that still to come. But a couple more questions for you on the issue of pensions. Let's go to Rochelle first, because Rochelle is saying, how does this thing work? She says, like how the market is slumped now, even though I'm due to retire, can I leave it until the markets come back up and then I can get my pension rather than taking it when the markets are down? Dennis, that sounds like one for you.
Yeah, I think people do have the opportunity to do that, you know, if they want, because if you think about it, the fund is there. If you say you want to postpone getting your annuity, because that's basically what it is, you can leave it there, right? And then it will, you know, accumulate some more or go down. It can go down also, you know. So it all depends on someone's circumstance. I mean, you could take the pension also and go and do something with it also.
Right.
You know, so
lots of choices there. All right. Here is Andrea with a question. Andrea says, I'm 56 years old. I've never invested before. COVID-19 is a rude awakening. Is there a chance of losing all my money if I invest? Now I hear you lose money when the market crashes. And I put that with the pension discussion because we're talking about people, you know, getting closer to retirement. So at that age, is that something that Andrea should be looking at if she's talking about retiring, starting to look about getting her pension? Marlene Street Forest, let me ask you that one.
Yes, let me contextualize it by saying that the market has lost about 27% of its value since December. That does not signify a crash in the market. So the market is still performing. There are companies that are posting, and many of them that are posting lower prices than the end of the year. Despite that, markets will go up and markets will come down. And what we have seen over the long run, that markets over a 5-year cycle, they have rebounded. So it all depends on how that portfolio is structured, and to look at winning stocks. As a matter of fact, at this point, there are many opportunities in the markets where the prices are low, and at this point, persons should seek to take advantage of those opportunities, understanding that markets don't stay down forever.
What
As a
about
matter
those
of
specifically, if I could interrupt you for a moment, specifically in the
Yes.
situation Andrea described, that she's 56,
56.
so heading
Yes,
towards retirement?
Yes, I think there is still a lot of win there for her to invest. There are companies that immediately after listing, we can see how their prices have done. So there is opportunity, and we have seen where even in this market, especially, persons have bought low, and the prices many of them are inching back up. So I think, as I said before, it depends on the stocks that that person will want to invest in. They would need to seek an advisor, and they would need to analyze those companies and to see which one. But definitely, I would still suggest that that person could look at the market. There are also stocks on the US market as well. And insofar as that is doing well, the individual would reap that reward.
All right, here's a question from Ishmael. And Gillian, I'm going to put this question to you. Ishmael is asking, what's an appropriate response for people who have 3 to 5 years left before normal retirement age? What should they be doing now during this era of the COVID crisis?
Well, if they didn't start investing before, they're a little behind. So I agree with Mrs. Street Forest that they should definitely, they can look to the market, because if they're trying to save or retire and have 3 to 5 years left, it's not a very long period. And she rightfully said that investments are for a long term if you want to see significant gains in them. So whatever you're investing in, whether or not it be real estate or stocks, the long term is better to see better results. So if you started late, look at the market now, speak to an advisor and get some advice on which stocks meet your needs, and ensure that you do your research so that you can be informed when you're speaking to your advisor. If your advisor says invest in X, you go and read up about X, look what X has done, and see if X is right for you as well. Don't leave it up to them. You should also take a part in the investment strategy if you're starting now. Then you can think about mutual funds and things that would be a little less risky, and it's diversified, meaning that they invest in different asset classes, real estate, stocks, etc., so that you can, if you're not interested in looking at the stock market directly, you can look at mutual funds and things like that, so that you can be a little bit more, you can trust that the company that you're going to, the investment broker, they have the expertise, so they would be better at advising you on a mutual fund or which stock portfolio to invest in.
All right, so perhaps a little bit more conservative though at that stage.
Right. Not as aggressive. So something like the mutual funds or real estate.
Let me go to a video question from Saeed.
Good night, everyone. My name is Saeed Bernard, and I am a law student at the University of the West Indies. Now, my question concerns the stock market. During COVID, we've seen where a lot of the stock prices would have fallen as a result of COVID. Now, a lot of people are looking at this and they're wondering when to invest. Do you invest now when the stock prices are down, not knowing what will happen after, or do you actually wait to invest afterwards, meaning post-COVID? And what are the effects of either investing now during COVID or post-COVID?
Okay, so interested in investing. Dennis, you want to comment on that one?
I think, like Marlene, that there are some great opportunities out there. I mean, if you think about some companies, and this is how I look at it, when I look out there and I see where people are buying a lot of food, right? People are going to the pharmacy a lot, right? And they're spending a lot of money there. There are stocks on the market that have these businesses. If you look at Grace Kennedy, for example, in the last quarter, their quarterly profit was 50% above last year, right? Now, think about it. Grace's book value has not changed pre-COVID or after COVID. In fact, it has gone up, but the price has gone down, which means that the value of that stock, as Marlene says, is very attractive. So people need to speak to their brokers, but I think that there are opportunities out there. I mean, you always, when everybody's selling is when you want to buy. When everybody's buying is when you want to sell, because when everybody's buying, the price go up and you sell. So I think there are opportunities there. The question you have to ask, and you have to be very selective, is look at the company and say, what does this company have? What is the product that they sell? And then what are the people demanding out there, right? So as I said, there are companies, we know people are buying a lot of food items. We know people are doing a lot of deliveries to home too. So Meal Package did very well. So that's the sort of thought process we need to have. There are some of them out there also, that will not survive. And you have to analyze that. So speak to a broker. I'm sure Marlene has people there also, that can speak to people. But I think the stock market is a great opportunity now.
All right. Melissa has a question. Melissa wants to know what's the impact of COVID-19 on IPOs for the year. Last year, 2019, everybody was all excited, which is the next IPO, who is going in, what you're going in at. And now everybody's saying what's going on, how many were projected, how many are now canceled or postponed. And Dwayne, with a related question, says Proven postponed their additional public offer in early March, just as COVID started. For the entities that were planning, will they hold or go to the market for the liquidity they likely need? If they do go, how successful will those likely be? Mrs. Street Forest, let me ask you to comment on that first.
Okay, that's a mouthful.
I know, right?
The fact is that last year we had about 18 securities listed on our market. And this year, before COVID, we were projecting somewhere again in that region for both the junior market and the US denominated market. We have seen that the companies that were planning to come to market, some of them have delayed coming because they are looking for a particular price, and they do, some do not feel that they may get that value. On the other hand, however, this is a time when there will be many companies that will need to have capital. And as a result of that, some are now looking at coming to market to get capital because it is going to be that more important to drive their businesses for the next couple of years. And when we talk about the capital, we're talking about the patient capital, where they are not going to be required to pay an interest on their money. Now, that is the supply side. As it relates to the demand side, which is those individual investors who would be investing in these companies, one would encourage them to do so, because we would expect that post-COVID, if the fundamentals of these businesses are sound, that the value, the price that they will be paying for those IPOs now, the value will be accelerated once that post-COVID period leaves us, So the fact is that we expect to get some people pulling back from the market, and some have indicated that already. But we also expect to get new persons that need capital, definitely need capital to come to market to list. So it is going to be a mix.
All right, Gillian, you want to comment on that? What would you expect to be seeing this year?
Well, we know, I think it was a record of 19 IPOs that were slated for this year, and proven. You saw what happened there. And I know JPS and Tropical Battery were supposed to come online too in terms of IPOs. So yeah, as Mrs. Streetborough said, there might be some that are pulling back because of the nature of their operations and what they expect to happen re-corona, and persons going back to work and being able to sustain whatever it is, the product or service that they're offering. And as you said as well, there are companies that are now pivoting and they're doing better in a time of corona. So they might be looking to the market. So it's all a result of what will happen in terms of the demand and supply of certain products and services.
All right, let me bring in Alison on this question from Phyllis. What advice would you give to a young family, a middle-aged family couple, and those who are 65 plus who are looking at these low markets?
Well, it really depends on what your income flow is. You know, we talk about the stock market, but we need to realize that the stock market has wealth and it also has income. There's two big differences. So with the fall in the market, your wealth may have gone down, as Marlene has said, in the 20% range, but that doesn't mean your income has changed. So if you're a young couple, if you're lucky enough that you're both employed, I think now is the time to look to determine which stocks are quality, good management, can even pivot. So you could be doing something now, and COVID has brought an opportunity that you can change into. You should also look to see how much, what's the dividend, what's the yield, how much are you gonna get? Because as a young couple, depending on maybe one of you has lost the job, or maybe, you know, you're part-time now, you need to look at how much income you need to survive this time of COVID. So the needs are different for a young couple that has a longer time where they can work versus a 65-year-old who is now looking perhaps at retirement. And I'm not assuming that at 65 you're retiring. You know, my grandparents lived to their 90s. So you will find that people can still work. So I'm not going to assume that they're going to live off pension. However, another thing to bear in mind, when you're looking at your pension money, that doesn't mean that the income you earn from the pension can't be reinvested in the stock market if you're seeing good returns. So what you need to do is sit down, both the family and the over 65, and take a look at your financial goals. How much cash do you need to survive for the next 3 months? How much can you afford to put in the stock market with a return? And which stock is going to give you dividends versus capital gain appreciation, which we know will come? Because I mean, let's be honest. In 2008, when we had a financial crisis, if we had panicked, we wouldn't have some of the gains we have now. So we can't change a pandemic. We can only change our reaction to it. So my advice to both of them would be stay calm, do some research, get some advice, and look at the quality of the management of the company, look at what cash you need to get you through this, and then look at what income you need, and don't worry too much about your wealth because it will return. How much income do you need now?
All right, I have a question here on Twitter. I just want to, Denzel Williams, let me bring you in on this. Jerome is saying the Cayman Islands and Bermuda have passed legislation allowing citizens impacted by COVID to withdraw a portion of their pensions to help offset challenges. Do you think Jamaica should follow suit given the billions sitting in pension funds?
Yeah, I mean, it all depends on the context, but nothing is fundamentally wrong with that principle, because you can borrow now from your future savings and use it for various kinds of investment. But I want to make another quick point as well, Dion, and that has to do with, while we're talking about the portfolio side of investment, we also have to look at investment in the real economy. Because while we're talking about stocks, etc., people can also, those who have excess cash and depending on their income stream, which is I think the point that Alison was trying to make, making, you can start a small business, for example, a business especially in the healthcare industry, sanitization, cleaning, those types of things. They're going to do very well. So if you can find partners and start making investments in those kinds of real sector businesses, you will make money. Agriculture, for example, invest in planting of vegetables, exporting of tubers, and those kinds of things. These things will make money as well. So we have to look at the investment portfolios, not just only on one side, which is the portfolio side, but we also have to look at investment in the real economy. And the final thing I will say is that important for persons to consider as well is the amount of cash that they will have, because cash is going to be king in situations like this. So if you know you're close to retirement and you're uncertain of your future, it is very important that you try to keep cash. If you have many sources of income and various ways of getting cash, then you can use excess to do a lot of these exploratory type of investment as we're talking about. But importantly, you really need to keep cash, because we don't know some eventualities that may happen, and people need to keep that in mind.
Okay, Dennis, you want to comment on that question about the pension funds?
Well, it is something that we have been discussing at PIAJ, so
really?
I would want to. I don't want to. I don't want to comment on it. No, so it's something that has been discussed.
Okay, here there, Jerome. Look like you're a fly on the wall in some of these meetings, man. Okay, let's go to another video question.
Due to COVID-19, will future retirees be affected in regards to their pensions?
Will future retirees be affected in terms of pensions?
Yeah, definitely. I mean, remember your pension, certainly in a direct contribution. Okay, you have the DB, direct benefit, and direct contribution. Most pensions are a direct contribution. And what it means is that your pension depends, your annuity, what you can buy depends on the value of the pension fund at the time, or your portion of it. So if the value goes down, it means that you can buy less annuities going forward. So if pensions, if you were to cash out right now, it means that the amount of money you have available to buy annuities going forward, it will be affected. Now, again, it depends on the mix you had in terms of asset allocation. Most pensions would have equities in it, so most pensions would have taken a hit, maybe not a significant hit like a 27%, as Marlene said, because you don't have the full mix in equities. And this is part of the legislative process, the act that says you can't invest everything in one asset class. And, you know, we prove now why it shouldn't be like that. But most certainly it's going to be affected going forward, unless the value rises back.
All right, let's go to a break and we come back with more of your questions for another in our virtual town hall series. We're looking at COVID-19 and your investments. So keep those questions coming in, 3810082, and we'll be right back with our panelists and your questions right after this.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much.
The education system, tourism, businesses, and everyday life have all been impacted by the coronavirus pandemic. But what about your investments? How has the pandemic affected your savings for the future? Join us for another RJRGleaner Group virtual town hall this Thursday, May 21 at 8:30 p.m. as we discuss COVID-19 and your investments. Ask your questions. Get the answers you're searching for. That's a virtual town hall this Thursday, May 21 at 8:30 p.m. on TVJ, JNN, onespotmedia.com, The Gleaner Online, Radio Jamaica, Power 106 FM, and TVJ's YouTube channel. Send us your questions to 876-381-0072. That's COVID-19 and your investments.
Reduce your risk of viral illnesses like the flu and coronavirus. Wash your hands frequently with soap and water. Cover your nose and mouth when coughing with a tissue and dispose of it. Avoid close contact with anyone with a cold or flu-like symptoms. If you become ill, please visit your doctor or the nearest health center and share your travel history. The flu and coronavirus can kill. Let's protect each other. A message from the Ministry of Health and Wellness.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much for watching.
COVID-19 tip. Protect yourself and others from getting sick by washing your hands after.
Well, I have 3 investments in the hospitality business, and all 3 of them are producing an income, but we still have bills that we have to pay. In that we have to keep a few people to keep the plant. One of the concerns is that nobody can say when the industry will be coming back. If we do have visitors in Jamaica, I think the high-end property may get the better of who is coming, because the people who are coming is people who can afford to take a vacation under any circumstances, so they will have the money to pay, and those people won't be coming to the smaller properties. So the smaller properties going to have a difficult time.
So what to do when your investments stop giving you returns? That's what we heard there from that gentleman. Remember, you can keep your questions coming in, 3810072. But let me ask Alison Peer to answer that gentleman. But what do you say to him, Alison?
Well, I didn't hear the video clip so well, but you said, what do you do when your investments are not returning?
Yes, he has small tourism properties that now just aren't generating anything. And he says he expects when the market opens back, it's going to open first and mainly to the high-end section of the market.
Not necessarily. I mean, now is the time to throw out traditional thinking. You know, my advice, he probably has children, go to them and discuss what they think he should do with that. Being honest, sometimes we don't talk to our children and they have a lot of information and they know where the market will go, because think about it. Who would come do some market research with any relative or friend that he has overseas? In addition, you know, Denzel pointed this out. We need to start to employ ourselves locally. So perhaps if your investments are not giving you the money that you had planned, it's time to look to see what other things are going to give you the money that you would need. So as an example, you know, we talk about agriculture, we talk about, you know, real estate. However, we don't do enough research and development. So if he's there and he wants to understand what to do, maybe looking online, you'd never know what kinds of things he could show that property and charge people to take a look and do some dancing. I'm giving ideas with what you can do online. So my advice would be, since people can't come to him, he should go to the foreign market and perhaps explore showing some of these wonderful parts of Jamaica online. But again, that's probably what his children would tell him, assuming he has kids or, you know, nieces and nephews. We need to start to use technology. We need to start to look at different ways of offering our beautiful Jamaica and offering our talents. Because what if, I mean, we can open up, but what if no tourist comes? We need to start to look at other ways to drive money and drive wealth.
As they say, out of the box thinking. Gillian, you want to comment on that?
Yeah, just to add that nobody knows when tourism will pick up. It could be in the short term, it could be in the long term. People don't have the confidence to travel right now. So you have to think about ways to pivot your existing business. What we're seeing in real estate, I know we haven't touched it yet, but is that a lot of persons who were doing short stay vacation homes, they have now had to convert to long-term rentals and do other things to generate income that they would have lost because of the fallout in the Airbnb market. So yeah, you do have to think about ways to pivot what you're doing if you have properties like that. But all right.
All right, let me go to a couple more questions on stocks though, because Dwayne has a question I think a lot of people want an answer to. He's asking about the impact of the withholding of dividends. He says, given the performance of the stock market in recent years, people were buying stocks and a lot of people were counting on those dividend checks. Mrs. Street Forest?
Okay, let me clarify something here. It is the financial holding companies that the Bank of Jamaica had indicated that they could declare but not pay those dividends. Not all companies that are listed on the exchange. In fact, many companies, as we speak, are still declaring dividends. But if we go back to the financial holding companies that make up 52% really of the market capitalization, and obviously those companies that people invest in, a decision was taken that if those companies declare dividends, any investor who has less than 1% or less holding of those shares will be paid their dividends, and that represents 90% of the small investors. So I would imagine that 90% of the investors would still be served in terms of getting their dividends that would be declared and paid to the company. The other people who would hold more than 1%, those would be payable to them whenever the situation in terms of liquidity, etc., in terms of the economy picks up. But definitely 90% of persons will be paid their dividends once the company, those financial holding companies, declare. And for the others, as a summary, once the company declare dividend, it will be paid. So there's no big problem there, but for the very, very large investors in terms of the financial holding companies.
All right, Rebecca is, sorry, somebody else was coming in? Okay, Rebecca is asking, generally, you'll soon see why I'm smiling. Rebecca says, generally, after a crisis similar to this pandemic, how long after can we expect to see positive returns on investments? I don't know that we've ever seen anything similar to this pandemic, Rebecca, but nonetheless, Denzel Williams?
I smile as well, Dion, because I was going to say the exact thing that I don't think you have seen anything like this before. However, what I would say is that a lot is going to be dependent on how quickly we get economic activities going again in terms of speeding up demand and speeding up consumption, speeding up confidence in the economy. As you would have heard from the IMF, they are looking at a recovery roughly about 2022, 2023, thereabout. And again, that is all dependent on how long the containment measures are in place and how quickly the virus goes away, or at least we can coexist with the virus and make sure that we actually stimulate economic activity. So I think a lot of that will be dependent on how these things work out.
Dennis, you want to comment on that?
No, I agree with Denzel. I mean, it depends a lot on that. What's going to be very important is how quickly do we get jobs back also, employment. Because a lot of businesses depend on economic activity. So how quickly we can get the productive sector moving. I mean, remember with the US losing 30 million jobs also, which is our biggest market for exports, then it means we have to do some real out-of-the-box thinking, because it means that between the US and the UK, which is most of our exports, and Canada, they have a problem there, right, in terms of employment. So it's going to be a little while. So we have to start thinking outside the box. How can we generate economic activity internally? You know, how can we reduce that $1.2 billion US food bill that we're importing? How can we reduce oil consumption, you know, by looking at maybe mass transit and an efficient mass transit system? So those are some of the things I'm sure the Economic Recovery Task Force is consumed with, because, you know, we have to start thinking like that. So as Denzel said, it's really about generating that economic activity again and getting things going. Once that starts going, then we'll see the returns. And I think that, I mean, Marlene spoke to the fact that stocks have fallen significantly. If you fall significantly, it means that the upside potential is great,
But
you know, if you choose the right stocks.
This next question, though, I think relates exactly to that, because you've all have been saying there are opportunities out there with prices having fallen. Archibald, though, is asking, how, though, do you assess whether to take that risk? So you hear there are good prices out there, you're looking out there, but how do you make that kind of determination? Alison?
You know, sometimes people...
Let me just let Alison go, and then you, Denzel.
Oh, sorry, Alison. Yes, go on.
One of the things that sometimes we play a game of trying to determine when the bottom of the stock market is there. So, you know, you're like, oh my God, if I buy now and it goes lower, I've missed. Or if I sell and it goes higher, I've missed. You know, I think you have to look at the quality of the company, the quality of the management, and make that determination, because we don't know when the bottom is going to be there. So if you look at a quality company and you have the cash that you can invest, that you don't need to live out in terms of, you know, whether you're going to lose a job or, so if you are confident that you have enough excess money, my advice would be look at the quality of the stock and you can still buy now. It really is, you know, a personal choice. So you do need financial assistance. However, look at the quality of whatever it is you're investing in. Some people will tell you, wait a little bit more until the economy picks up. Cash is king. That's true, but it really depends on how much cash you have, because nobody has a crystal ball, otherwise we'd all be rich. And if you look at the stock market, you have to look at it on a long-term basis. The market has gone down, but if you look at over, you know, the next 5 or 10 years, assuming we don't have another pandemic, the stock market has shown that you will increase your money. So when to buy, it really depends on what it is you're buying and the quality of it. I wouldn't wait, I'm talking me personally, I wouldn't wait to look for a bottom if I see a stock that is lower than it was last year and I see quality management, quality products, and a good return. I would buy now.
Glenford is asking, is this the time to try other investments like foreign exchange trading or cryptocurrency? Is this a time to focus on investing generally, or should I hold cash? Gillian, is this the time to go off into things like crypto?
I don't know much about cryptocurrency trading, but I do know that there is no market that has been spared from the effects of coronavirus. So every market is having some effect, whether or not it be a big one or a small one, depends on the market. But I wouldn't dabble into things that I don't know much about right now. In any market that you're investing in, do your research and speak to somebody who is trusted and proven in the industry that you're investing in, so that you can get good advice.
Okay, my apologies. I think I was actually supposed to go back to Denzel, so I'll ask him to comment on that question as well, and then make the other point he had wanted to make.
Right. No, I think Gillian's intervention is quite solid advice. Go to the experts and see what is it that they have. Do your research, but also look at your own personal circumstances. I think that is going to be key before you make all these explorations. But the other point I wanted to make, Dion, had to do with, to pick up from where Dennis left off, just to say that the issue of stimulating the economy is so important, and that is why I think that we should rethink the cutting of $30 billion from the capital budget, because I think that is a type of spending that is going to be needed to stimulate the economy in a time like this. And the government is going to be a strategic partner in trying to stimulate the economy. So I really think that at this time that we really look of taking that $30 billion from the capital budget and use that $30 billion to invest in some seriously bankable projects that can provide employment and can stimulate the economy.
Can I make a comment coming back to when we asked when will the economy return?
Yes.
I think if we sit and wait, we're going to lose a lot of opportunities. You know, we've been traditionally doing things a certain way, and I think we need to use this time to properly plan. Jamaica used to be the food basket of the world. You know, we used to produce sugar, we used to produce the bananas, we used to produce a lot of things. You know, I moderated a U.S. Chamber AmCham seminar yesterday, and the U.S. Chamber has said that the U.S. is really in need of food. We are an hour and a half by flight. Some of the things that I think we need to start to look at is how do we get our products out of Jamaica and into other places, and how do we look at getting better infrastructure, lower energy costs. So I think to also pivot to what Denzel is saying, I don't think we should wait until tourism returns, because we don't know, it may never. We should look at other opportunities that are now there. You know, we hear that Mexico may be having some issues getting products into the US. You're not sure, for example, if what is essential in the US, if it's essential anywhere else. I think now is the time to look at those countries, look at the Cayman Islands, look at our other countries in the Caribbean, and determine whether we can get not just agriculture, but pharmaceutical products. What do we have that we can export? I think we start to really plan now to get our energy costs and get all of that infrastructure in place. We'll be ready when things get back.
Let's go to another video question.
Now that so many persons are being laid off and receiving pay cuts, what are some of the best investment options for them during this time of the pandemic?
Okay, so she's saying if you're laid off or if you've had a pay cut, should you be looking at investing? And if so, where? Dennis?
Well, what you have to do is look at trying to generate income again. I mean, if you invest in like the stock market, for example, there's no income that you're going to get immediately, you know, apart from maybe dividends, and that might not come depending on the company. And if it comes, it might come in the next quarter. You need money now. Denzel made a very important point earlier, which is look at opportunities that are out there, you know, in terms of doing some business. And that is something that's critical, because there are opportunities that arise because of the situation. For example, some people went into closing down their production of, you know, things that are not in demand, and went into making masks, you know, or went into making hand sanitizers, you know, that sort of thing. I see a lot of taxi men, for example, who are now into delivering products from places like PriceMart, you know. So people have pivoted in that way. And I think that is the best thing to do, especially if you lose your job. It means you really might not have a lot of income on you, you know. So how can you generate some quick income? I certainly don't believe that you should be looking at things like the person said foreign currency trading and cryptocurrency, which I don't believe is a real investment, you know.
That's another whole program. I don't know if anybody else wants to weigh in on that though, because I do think that's an important question. Should I be looking at investing now if I've had a pay cut or lost my job?
Well, I think if you have lost your job or you have a pay cut, the first thing to do is to determine if what you have left is sufficient for you to live on. That's the first thing. And then if it is sufficient for you to live on, then you can think about some investment. It might not be sufficient to go and open a business, but certainly it could contribute as a part of, say, someone or a company wanting to start agriculture, large-scale agriculture, and wanting monies to invest. Because this is how we tend to divorce the stock market from the real economy. But the stock market is the real economy, because what it is doing is investing. Investors are investing in companies and having a share of that company, which probably they would not be able to operate a company all by themselves. But the opportunity now presents itself that they can invest in a company that will be looking at, coming out of the economic rut. So obviously still, I think they would be the best drivers to go and invest in a company that wants money and to list in on the stock exchange. But that all depends on whether they have a surplus. I think persons have to look first to see what they have after this cut in salary or they are out of a job.
All right.
Can I also add that we also need to relook at education. If you first look at how much money you need to live, one of the things that you need to look at is perhaps what you were doing before is no longer useful or when we return. When I say when we return, when we fully open, because we're not closed and we didn't go anywhere. One of the things that got us forward is education. So if you can afford to put aside some money to live, also use that time if you've lost your job to upskill and also have relevant skills, because sometimes some of us are educated but useless. So we need to ensure that you get the right education, and now is the time to get that training so that you can move into, because we say pivot, we really mean moving into something different. So sometimes when one door closes, it means get some more education and come back, wheel and come again and do something better or different.
Let me go to a break. While I ponder whether or not I'm educated but useless, as Alison just said. Let's go to the break. When we come back with our virtual town hall, let's talk a little bit more about real estate investing. So stay with us. We're back in a moment.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much.
The education system, tourism, businesses, and everyday life have all been impacted by the coronavirus pandemic. But what about your investments? How has the pandemic affected your savings for the future? Join us for another RJRGleaner Group virtual town hall this Thursday, May 21 at 8:30 p.m. as we discuss COVID-19 and your investments. Ask your questions. Get the answers you're searching for. That's a virtual town hall this Thursday, May 21 at 8:30 p.m. on TVJ, JNN, onespotmedia.com, The Gleaner Online, Radio Jamaica, Power 106 FM, and TVJ's YouTube channel. Send us your questions to 876-381-0072. That's COVID-19 and your investments.
Reduce your risk of viral illnesses like the flu and coronavirus. Wash your hands frequently with soap and water. Cover your nose and mouth when coughing with a tissue and dispose of it. Avoid close contact with anyone with a cold or flu-like symptoms. If you become ill, please visit your doctor or the nearest health center and share your travel history. The flu and coronavirus can kill. Let's protect each other. A message from the Ministry of Health and Wellness.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much for watching.
COVID-19 tip. Protect yourself and others from getting sick by washing your hands after coughing or sneezing, when caring for the sick, before, during, and after you prepare food, before eating, after toilet use, when hands are visibly dirty, and after handling animals or animal waste.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest
Thank you so much for staying with us for this virtual town hall series. We're looking at COVID-19 and your investments. So let's look a little bit at real estate investing in this section of the program. And let's start out with a question from Dwayne, who wants to know what's likely to be happening with prices. How are we likely to see prices trending? And how are banks likely to respond in terms of interest rates? Gillian, let me ask you.
Well, interest rates, I'll start with the interest rate. Interest rates have been extremely low, not the lowest in history, but they're at a low for the past 10 years. So the average rate is about 7.7% right now on mortgages. So you would be able to purchase a home and you'd have the benefit of making lower monthly payments in comparison to the past. As a matter of fact, when Corona was initially announced in Jamaica on March the 10th, that was the very day that the minister also announced that NHT rates were going to be lowered by 1%. And when NHT lowers their rate, the market would generally react. The minister also announced a reduction in asset tax, which had to be rolled back. But that also was designated to push commercial banks to lower their interest rates. So interest rates are low now, but the measures have been put in place even before Corona came to allow them to go down even more. And then because there's lower demand, banks might be inclined to lower their rates even further to spark interest in getting mortgages. So in terms of prices, you might not see interest rates are low, but they might get lower. Prices in real estate, they tend not to go down very quickly, and they tend not to go down for a long period of time. Real estate traditionally has increased in value. Real estate prices increased even since the 2008 crisis. We've seen that real estate prices have been going up, and coronavirus, nobody knows the impacts of coronavirus, but in Jamaica, prices tend not to go down in real estate. But coronavirus is something that has unprecedented effects, or would have unprecedented effects. So we could see prices come down, but certainly not in the short term. In the long term, when persons might be foreclosing on their properties because they can't meet their mortgage payments, depending on what's happening in the economy, we might see some houses coming to the market, and the more houses that come to the market will drive the price down. And the lower end of the market in terms of prices is where the demand is really, really high. So because the demand on that scale is really high, we might not see a drastic drop in prices because there are several persons trying to purchase homes at that lower end. The luxury market now and the commercial real estate market, that's the market that might be facing a little bit of trouble because of what's happening with businesses, not many people being able to pay their rent in the months of May and April. So if you're looking at investing in a commercial real estate property right now and getting rental income from that might not be such a great idea because of what's happening with businesses. But the luxury high-end market, those prices are still high. They might have to come down a little bit because the demand, especially for overseas persons who want to come and buy those houses, is not that great because of the virus and the lockdown of the borders. So the demand for the luxury properties might also cause the price to go down a little bit.
All right. Anyone wants to comment on this? Because I'll just bring up the question from Philando at the same time, which is similar, who is asking, particularly in light of COVID-19, what are the prospects for the reduction in the cost of homes? So I don't know.
Right. It's along the same prices, the same line. The price is not likely to go down very far in the short term. Maybe in the long term, you'll see a slight decline, but they will appreciate over time, in my opinion.
Yeah, I don't know. Alison, have we actually seen reduction in home prices in Jamaica since the 70s and the 5 flights a day to Miami? Everybody was flying out and leaving their houses.
One of the things that we have to remember, I'm told, I haven't counted them, but I'm told there are more Jamaicans outside of Jamaica than inside Jamaica. And if we get our economy right, if we can get our handle on crime, I don't think our real estate would ever go down because you can't recreate more land And there's just something about Jamaica for Jamaicans. When trouble is, we want to come home. So especially those that are overseas, even if, they're retirees, etc., they may feel that pull. So, I don't think house prices in Jamaica go down. I was born in Hanover. I would love to find a house spot in Hanover if they'd let me back in, because they seem to know how to keep out COVID. So again, even within the parishes, we want to go home sometimes to our parish of birth if they will let us back in. So there's something about Jamaica. There's something about having a piece of the rock that normally that you would think that prices will go down, but from a demand perspective, with so many Jamaicans wanting to come home, I don't see how. We could see luxury, but I just think overall our real estate, just because of how many of us are out there wanting to live back in Jamaica.
All right. Now, Archibald is out.
As a result of that, companies that are investing in real estate, I think investors could look to them if they cannot buy a complete home, but they want an investment. They could look to those companies, all that has been said, to invest in those companies on the stock market.
Okay. Archibald is actually asking about, I think, leveraging real estate. If you have an investment now in real estate, how can you make use of lower interest rates? Denzel Williams, any thoughts on that?
Let me hear the question. Again.
I do beg your pardon. If you have an investment now in real estate, how do you make use of lower interest rates?
Well, what the lower interest rate will do more than likely is to give you more cash in your hand. So with that cash, you have that excess cash now to do other things that you can do, or you could have that excess cash to pay down on the principal that you have invested in that, if you still have a mortgage on those properties. So it will be useful. But just to go back to the issue of the price as well, I think it is going to be a function of the price point, in addition to all that the other colleagues have said. The price point that you're coming in at, because you would recognize that within a particular band of prices, say between say 10 to 20 million, there's a significant demand. It's very difficult for you to have prices going down. But when you're starting to go the 30 million, the 40 million, that's where you may see some movement in terms of the prices downward. But within the band of say 10 to 20 million, you may not see any significant movement in prices at all.
Okay. Question I've been hearing a lot of people asking, Jonathan, what's going to be the impact on Airbnb? And Marie asking similarly, is the Airbnb market now dead? Is it likely to pick up with tourism, or will consumer habits change back to hotels that have more stringent cleansing protocols? Gillian, let me ask you first.
All right. If the question was asked if Airbnb is dead, and it's not dead, but it's dying for right now. Maybe it could get a lifeline soon, but right now it's near to death. So I know personally persons who have been Airbnb-ing their properties. They've chosen to lock up the apartment entirely instead of trying to transition to long-term rentals, which is what's happened with many persons right now. So there are persons that have transitioned to the long-term rentals. There are persons that have locked up their house and said that they're not letting in anybody at all because they don't want to deal with the long-term rental and its complications. So yes, the realtors that I've spoken to, they've said that many properties are now coming in for rental opportunities. Whereas before they couldn't find anything in the rental space below $100,000. It's very hard. Now they're seeing an opening up of that space. So Airbnb, if it does come back, we will see, those properties probably being gobbled up again, and more interest in doing those luxury apartments so that you could get them Airbnb'd out for $1,000 a night and prices like that. So yes, that would be good for investment if you did have that opportunity, but nobody knows when Airbnb will open back up again.
Okay, I tell you what, let's go to a break. We'll come back. Our RJRGleaner Group virtual town hall on your investments, you and COVID-19. Back in just a moment.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much.
The education system, tourism, businesses, and everyday life have all been impacted by the coronavirus pandemic. But what about your investments? How has the pandemic affected your savings for the future? Join us for another RJRGleaner Group virtual town hall this Thursday, May 21 at 8:30 p.m. as we discuss COVID-19 and your investments. Ask your questions. Get the answers you're searching for. That's a virtual town hall this Thursday, May 21 at 8:30 p.m. on TVJ, JNN, onespotmedia.com, The Gleaner Online, Radio Jamaica, Power 106 FM, and TVJ's YouTube channel. Send us your questions to 876-381-0072. That's COVID-19 and your investments.
Reduce your risk of viral illnesses like the flu and coronavirus. Wash your hands frequently with soap and water. Cover your nose and mouth when coughing with a tissue and dispose of it. Avoid close contact with anyone with a cold or flu-like symptoms. If you become ill, please visit your doctor or the nearest health center and share your travel history. The flu and coronavirus can kill. Let's protect each other. A message from the Ministry of Health and Wellness.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much for watching.
COVID-19 tip. Protect yourself and
And thank you so much for staying with us for our RJRGleaner Group virtual town hall on COVID-19 and your investments. And in this final segment of the program, I want to talk about what next. How do we move forward in this era? Let me come to you first, Dennis Chung, though, because you were talking, you had a point in relation to what we're likely to see in terms of these expensive apartments, given what we've been seeing in terms of job losses.
Yeah, well, if in these apartment complexes, people lose their jobs, right? You think about it, they already have a mortgage that they're paying, right? Because in the past few months, a lot of apartments have gone up and a lot of people have taken mortgages and mortgage rates have been low. But when you think about it, the knock-on effect is that if people don't have an income coming in, they might not be able to pay their mortgage, but also very importantly, they might not be able to pay the maintenance to keep up these properties. And therefore, what I fear for is that the value might be affected because people can't maintain the properties possible.
But the law now allows the strata companies, the strata corporations to take over apartments if
but that thing is, I mean, by the time that thing process goes through, Diane, I mean, your grandchildren would have grown up and have children.
I will. All right, so let's talk about moving forward then. Alison, let me come to you. So at this time then, people should absolutely, whether you're employed or not employed or salary cut or whatever it is, you should absolutely be taking stock, so to speak, and figuring out where you are.
That's right. Now is the time to review your financial goals. Now is the time to find an expert and make sure that you research not just companies, but opportunities, because here's my concern. This is when the fraudsters also are planning for your money and the get-rich-quick schemes. So you need to ensure that you properly research, they're properly registered. You know, I'm an accountant. Make sure your accountant is registered with the Institute of Chartered Accountants of Jamaica, that they really are who they say they are. Ensure that you do proper research. But whether you're employed or unemployed, always go back to your financial goals. What is it that you want? How much money do you need now? What is your plan? And also, don't panic. The minute you start to panic and hyperventilate, that is when you make errors. Watch for the fraud. Just make sure you stick to a budget. Don't overbuy, and make sure that you have some plan to come out of this, because it could be a year, it could be 2 years. We can't just sit and wait. So my advice, have some planning, whether it is to improve yourself so that you can get a better job, whether it is to improve your relative that you're going to invest in to come into with you, whether it is to really look at your portfolio to see, what am I missing if I have some extra money? What do I need to do now so that Jamaica can change? And for Jamaica, we need to do more R&D investment. We need to innovate more. We need to do much more innovation in our IT systems. UWI, I'm looking to UWI to lead the charge, to tell us what we need to do and help us get where we need to go, because the internet wasn't there when I was a child. You'd never know. Now is the time to come up with amazing things to take Jamaica way, way further than we could have been if we didn't have this time to reflect.
A lot of people, though, as they're looking forward, are going to be saying to themselves, what should I do? Should I move now? Should I not move now? And Gillian, so I have Dion asking, for instance, about real estate. If I want to sell now, or you could add to that, if I want to buy now, how do I ensure I get the best price? Is this a time to take those kinds of major decisions?
Well, to speak to that point, I did a little Twitter poll before I came here amongst my followers. 200 people responded, and I asked them, if you are considering purchasing a home before Corona, did you cancel the purchase or pause it because of what has happened? And 54% said they decided to wait because of the uncertainty of their situation or of what's going on in the market. So many people are holding back right now in terms of buying a home because of the uncertainty, and nobody knows if we could have a second wave or if their financial situation might change, because getting a mortgage involves a lot of commitment in terms of the down payments. You have to save at least 20% of the value of the home to take care of the initial fees and the closing costs and the down payment. So you need to think about what it's actually going to take to purchase a home. And in terms of selling it now, I asked the same question. If you have considered selling your home because of Corona, a whopping 95% of the people who took my little Twitter poll said no, they wouldn't sell their property because of Corona, but 5% have thought, well, maybe their circumstances have changed, and they said, well, no, I have to consider selling because maybe I need the income, etc. So really take a stock at your situation. Will you be able to afford the monthly payments? Will you be able to afford the down payment if you're thinking of getting a mortgage? And if you're thinking of selling, what's going to happen after you sell? If you need the money now, what you're going to do with that money? Are you going to live off of it, or are you going to find another investment? So really talk to an advisor, think about your strategy in terms of making that decision.
Yeah, I think about those people, for instance, who've been planning for so long, who maybe just moved into a new house at the beginning of this year, all excited, and then Corona hits you, So what do you do?
Yeah.
Well, you have to, as Gillian said, you assess your situation now, because everyone will be able to act differently based on the capacity you have. So you have to do a real objective assessment of where you are. As she said, 5% of the people say, they don't want to sell, but you might have to sell, Or if you have enough equity in the house, can you use that equity to do something, to get some cash out of it and do something, but make sure you have a proper plan. Because if you get the equity out and you panic, right, and you do something that is caused by panic, and you lose that equity that you take out also, then
in a worse situation,
you have a double problem.
Yeah. Lot of these questions about moving forward, Mrs. Street Forest. So Phyllis was saying, look, man, should I just keep cash, preferably under my mattress?
It doesn't make sense, because you're not going to get a return on investment. Actually, if the dollar devalues, if we have coming back in terms of inflation, your cash under your mattress also devalues. So I would say take stock, and pun intended, look at the values that you can get from investing in the stock market over the long term. Investment is usually over the long term. seek professional advice, look for opportunities, and also understand that when you are looking at investment, look at a regulated market. As Alison said, you have fraudsters out there. Look on a market that is regulated. We'll look to the best interest of that investor from the company. The companies are regulated, and even the persons who are giving advice are regulated. So I would encourage persons to look at the opportunities in the stock market.
All right, then Denzel Williams, Keith is asking a question. After COVID, are we going to be building the same way, thinking only of money for investors? What about a new mindset in construction, offering insulated homes so people can be comfortable? I know you're not a construction engineer, but it's just a question that sounds to me like, as we move forward, are we going to be doing things in the same way? Or are we going to take from all the lessons we're learning here and move into the post-COVID era, doing business in a different way? What do you think?
Right. I think that's the essence of the question and not so much the specifics of it, which is after COVID, we're going to have to do a lot of things differently. And we have seen we have been hearing the phrase, the new normal. So a lot of things will be taken into consideration. We have to start to do a lot of things that we used to do in a different way. And then we have to analyze the impact of those. But just to say the common thread through all of this is that you have to analyze your own circumstances and see what it is that you require to ensure that you live a comfortable, decent life. And then based on that, you can now determine your own decisions about investment. But the final word I will say, investment in self is still always going to be a winner at the end of the day. Invest in self, improve your capacity, improve your competitive advantage, and you must win post-COVID.
All right, and Dennis Strong, I'll give the final word to you in about 30 seconds, post-COVID for you.
It is going to depend a lot on demand, because if people demand jeans today and demand jeans tomorrow, then people produce jeans. What might change is the way we do it. So for example, the whole work from home, the digitization, a lot of jobs will change because of that, and people have gotten comfortable with it. But if people demand the same products today and tomorrow, then we'll organize production around demand. But the way we do it might be different.
All right, and therein lies the material for many more programs and discussions. But we're out of time for tonight. Thank you all so much for being with us. Thanks so much to our fantastic panel. It's been awesome having you guys on. And look out, viewers and listeners, for the next in our series of our RJRGleaner Group virtual town halls. I'm Dion Jacksmill on behalf of the entire production team here. Stay safe.
Hi there, I'm Simon Preston from TVJ. Thank you very much for watching our YouTube channel. To see our latest videos and also to see live events, click here. To see our full videos on onespotmedia.com, click here. Thank you very much.
The education system, tourism, businesses, and everyday life have all been impacted by the coronavirus pandemic. But what about